Hey guys, welcome to the channel. And today we're going to be discussing PAAL AI. And we're going to look at the price protection, what it's doing, past performance, and we can see how it's holding up. So we can go back to the start of the chart. Was back in September 2023. You can see that we went in this big uptrend from then. We then formed a bit of a pennant. So we formed this pennant structure, which broke out, and then we shot to the upside. We did leave behind an imbalance, which would have been a good entry point on the retracement, which was this candle before this big one, which was always going to be filled. It just shows how you just got to be patient and wait for these opportunities, wait for them to come back. It's just a risk-free way of trading. So you got the breakout, you could have chased it and you could have made good gains, but you can always get back on this retest. So right here, you've had the opportunity to get back in for PAAL, and then you've caught this move on the way down. You can see that it was also in a big wedge here. You can also see that that's also broken out. It was a bit of a bull flag actually, by the looks of it. It's like a parallel channel. Bull flag is a parallel channel like that. I'll draw it like this. So that's the flag, and then we've got the flag pole here. So for this, I would have played the session low, which is the bottom candle as well. So you've got this imbalance, and you've also got your session low. Where'd it go? So you know your session lows here. So we've taken the session low, we've taken the imbalance in the market, and then we've gone up. So draw that bull flag again. So the target for our bull flag is, if we measure from the bottom of the bull flag up to the top of the bull flag, 631%. So that from the bottom of our move, which is the top of this imbalance, we can measure 631%, which lines us up with the up the top here, which if it came up to that level, that would then indicate that we have a double top. So if we came up to here, maybe then we'd come down a bit. So that would have a double top there, which always means that there's liquidity above that level. And the thing with liquidity is it always wants to be taken. So it could even go straight up and then down and then up and then back, just to take that liquidity out of the market. So if we go out to a weekly, we can look at the Fibonacci target. So that's the short-term target, we're looking at the all-time highs to retest it, which is also a resistance zone. We can put in the Fibonacci tool to get what the Fibonacci says. So from the peak, go down to here. And that lines us up with $2.90. So once again, guys, the way I like to play this is I would start taking money off the table at about 90 cents, and then I would just dollar cost average out. I'd go, so 90 cents, then I'd go, say, $1.20, and then I'd take $1.50, then I'd take $1.80, then maybe $2, $2.30, and lastly $2.50, and then your high of $2.88. So I'll just be taking that's 1, 2, 3, 4, 5, 6, 7, 8 take profit levels. Remember, we want to be taking profits this bull run. The strategy I like to do is I just like to keep, say you get up to this level and you go to, say, past 90 cents, you shoot up, you go to $1, you put your stop loss at 90 cents. If it takes it, it takes it. Otherwise, it goes up to your next one. Then you move your stop loss up to this level. Then you move your stop loss up to the next level. And who knows, you might get all the way to the top and you might not get stopped out, and it just compounds. That's the way I like to do it. This is not financial advice. If you like the content, please like and subscribe, and I'll see you on the next episode. Thanks, guys. See ya.